Welcome to Power Charting. I'm Bruce Frazier, your host. So many great questions come in and week out about the mechanics of point and figure construction, how to do counting, and so on. And I just thought for those of you that really are intrigued with point and figure charting and are interested in becoming sharper at it, better at it, that we would do a workshop. Now, my sense is that we're not going to get it all done today. Hank and I started doing these point figure workshops, well, literally classes, graduate classes, after we began teaching the Wyckoff Method as a graduate course. We realized that point and figure is difficult to grasp. It's not easy to construct these charts. It's not easy to conceptualize them. This is true for everybody. And so we started a second semester class that was mostly focused on point and figure analysis and construction. And so what I'd like to do in the meager amount of time that we have here today and next time is to work on point and figure as and the many aspects of it. So what we're going to do is we're going to talk about the benefits of point and figure charts, which is primarily that you can do these incredible horizontal counting method techniques that give you really interesting price objective estimates that are, really pretty remarkable. And unlike anything else that I know of in technical analysis, is the horizontal price objectives that you can generate with point and figure charting. We're going to talk about construction tips and tricks. We're actually going to start with that. And then chart types, and then case studies, and some of that's going to come next week. All right, so let's get going here. So let's hold off on this chart for a minute and let's go to construction. So here you can see, as an example, here's Loews Corp, symbol L. Kind of an interesting chart because notice that there is what appears to be an accumulation type structure after the March decline of 2020. And this is just begging to be counted as a point and figure counting method. Here you can see on relative strength that there's been this long-term downtrend, and all of a sudden this downtrend has turned into a relative strength basing structure. Now it's up and out of this base and is above its long-term moving average, looking as though Lowe's might want to become emerging leadership. So let's do some point and figure counting here. So we're going to start by going to the bottom of the page. By the way, StockCharts.com has a great point and figure charting engine, and that's what we're going to work on today. So we can go to the bottom here and we can click on point and figure, or you can go to the top and put in the symbol, go to sharp charts here, and instead of sharp charts, select point and figure. Click on go. We have a chart. But what we want to do here is we're going to fool around with a couple of different chart types. Here are chart attributes. And so these are the primary attributes of the point and figure charting engine that we're interested in working in. The chart attributes that we want to keep in place here on a regular basis is here, end of day, end date. We want that to be today. You can go back historically, which is very valuable, but not for what we're doing today. Always use daily data. When you're doing a normal point and figure chart, even longer term point and figure charts, use daily data. Now we're going to talk about intraday probably next week. And when we talk about intraday, we'll change that. High low is the type. You choose the size. I'm just making these charts a little larger so that they're easier for us to see in the video. And then volume is a very useful tool. We are going to turn the volume off. You can see I default to having volume. And so here's the chart. Now let's go to chart scaling. This is really, really important in developing our technique for constructing point and figure charts, because we have scaling types: traditional, percentage, dynamic, user defined. All of them are useful and valuable to us. We're going to start with traditional. Traditional uses a scaling technique where everything under $20 is half point scaling, and there's quarter point scaling even below that. Up to 100, 20 to 100 is 1 point scaling. Over 100 is 2 point. Over 200 is 4 point, etc. Traditional scaling is always what we'll start with. Reversal method is very important because one box, it's always going to be an odd number. 1 box, 3 box, 5 box are generally what we will use. This is the way to think about it. 1 box is traditionally, for daily charts, is a swing trading method that's related to daily vertical bar charts. 3 box reversal method is going to be related more towards position trading and also campaign trading. So we can talk more about how we define those later. So that's 3. And then 5 box is going to be like really big structures, campaign trading, very long-term time horizons. We'll look at all 3. So here, let's start with reversal 1. We'll come back and look at these other scaling techniques later on. So let's update this. And here we have a 1 box reversal, traditional scaling, daily data, point and figure chart of Loews Corp. You'll notice that in the 1 box method, and this is a charting convention, it's very important, there are point and figure charting engines that do not do this correctly for the Wyckoff method. And that is that every column has to have, in the 1 box reversal method, at least 2 entries in it. So here we can see right here, we'll highlight this. Right here, we can see that there's an X and an O. X is when you're going up, O is when you're going down. So we went down for 4 points, we went up for 2, and then turned back down. There was a 1 box reversal down. It didn't follow through and keep going down, so we have this 0 for a down entry, and then it went up again. So we then, because the rule is you always have to have 2 entries in a column, we had to put the X in this same column here to put 2 entries. Then we went down again, and A is the month of October. So 8 is the month of August, 9 is the month of September, etc. You can turn that on and off as you choose. We went down, that would normally be an O, but it was the first entry in October, and then turned around and went up for 3 points. So reversed up, and so we stay in the same column because we need to have at least 2 entries. I know this is confusing. This causes all kinds of trouble for students initially. It's really good to plot them by hand for a while just to learn this. So, but what we're going to do here is we're going to take this count. We see that there's this nice accumulation count that gets turned into a new uptrend. So we're going to count across here from what we call the last point of support, the last decline before the uptrend begins. We count from right to left over here to the low. This is 24 columns. If I counted it correctly, I've been known to make mistakes. So we have 24 across times 1 point scaling times 1 box reversal. So 24 times 1 equals 24. So we count this across, then we take from the low, which is 28. So that is going to be 52. And then we count over, and we flag this count up. And so we have 52. And then from the count line, which is this last low here, 33. So we go 33 plus 24 is 57. And so we will flag this on our chart, and this will become our swing trading target. Pretty slick. So this is a nice little structure. Now, what about a larger count? So this is a one box method. Let's go down here and change this to 3 box reversal method and see what we get. Interesting. So here is the accumulation structure that we saw on that weekly vertical chart. Remember, 3 box reversal is going to be more akin to a weekly time frame. It's not perfect, but this is how we generally characterize it. So here we have a count that goes across from here over to here. This is an accumulation structure. It has been resolved up and out. Beautiful big catapult wall, we call it, where it jumps up and out, backs up 3 columns or 3 entries, which, remember, we're doing 3 box reversal. So we have to have 3 entries downward to be able to go over and down into the next column. I'll comment more on that in a minute, but then it turns around and goes back up again, makes another new high. So we take this count across here, and notice the last point of support is at $33. The initial preliminary support is at $33. Happens often. This is symmetry. This occurs in accumulation structures all the time. Well, this is 21 columns across times 3 times 1 point scaling. That's 63. So we add 63 to the low at 28, and that gives us a count, and we will draw upwards here to, this is 91. Excuse my poor penmanship. And then this count here is, well, this is 91 here, and this is 96 here. And so we have this count objective from this accumulation structure in Loews, and we saw from the vertical weekly chart with relative strength that now Loews is turning into an uptrend in price and relative strength. It's had a beautiful jump up and out of this accumulation area. Fascinating, looks great. So there is our counting method for the 3 box. All right, so here let's go and do 5 box reversal. So now we see this area here. 5 box reversal method means that to go from one column to the next, the only thing that can cause you to go from one column to the next is a reversal of some minimum amount. In a 3 box method chart, you have to go from, say, you want to put an entry for in the next column, you have to have 3 down entries, 3 1 point movements down to be, so 28 to 27 to 26 to 25. So 3 down, and then you go over and down and put 3 entries at a minimum or more. 5 box, you've got to have a 5 box reversal. So you either have to go up 5, in this case you went up 6, or you have to go down 5 or more to be able to go over to the next column. So point and figure is not a function of time, it's a function of volatility. And that is the reason that you can go take counts from the volatility that's occurring in the structure of a point and figure chart is because you're literally you're objectifying or counting the volatility of a period of time in that chart. So I am going to suggest to you that you might want to take a count here, go across, count these columns over to here, and see how many columns you have, multiply that by 5, and then by the scale of 1. Then you might even try going from here across over to this initial downward surge and count all the way across with the idea that this could be a large campaign structure that could be counted. So there we go. Now we have your basic counting method or technique, scaling. And so now let's look at some of the different scaling characteristics. We've seen 1 box reversal, 3 box reversal, and 5 box, and how in different time frames they're useful to different trading techniques. Okay, be right back. Here is a stock that I put into my point and figure chart list back on January 30th of 2019. This is Corning GLW. Note here that there is a large accumulation type structure. And so this could be construed as some kind of a campaign candidate. And so what we're going to do is, first of all, we're going to use a method here, dynamic ATR. So this is ATR scaling, and we're going to let the computer calculate the scale over here on the right rather than using traditional scaling. There's a few reasons to do this. This also is very useful for intraday charts. In this case, we have a count, or we have an entry here in 2003 that goes all the way down to 94 cents. And the scaling doesn't change all the way through here. And you can see that there's really a compelling accumulation type structure at work. So we're going to count from here to the low. And you can see there's also a count from here over to this preliminary support. I'm going to leave it to you to do that. But this count across here is 31 columns. This is a 3-box reversal method. And so we're going to multiply 31 times 3 because this is 3-box reversal. And then the scaling that we have, and you'll see it up here, the box size is 0.94 right here. Now, so it's 31 times 3 times 0.94, because we're letting the computer determine the scaling based on the average volatility of this instrument. This gives us a count generated from here over to here of 87.42 points. We add that to the low and we add it to the count line, which in this case, is 1410. So from the low, we get a count objective of 8836. And then over here, and we'll just draw this across. This is called the count line. Across the 1410 area, we will draw this across. We take our count from the count line and from the low. That's our convention. So from the count line at 1410, this takes us up to 101. And so we have here 2 counts across. We have 101.52 and 88.36. Now the count potentially could become much larger because we might want to encompass all of this, because notice now that we are up and out of this accumulation area. Actually, the smaller accumulation area here, you can see that there's sort of a creek across here, a jump, a backup, and then out we go. Now this area here is from 2017 to 2020, from here to here. And this is a backing up action, and it is okay to count those, but my preference is always to take the smaller count from here to here once we jump out, and that becomes our count objective. Also, we might want to take this count from here to here as a swing trading objective also. And so this often is a place where the market will stop, pause, look and listen. So now once we have a chart that we want to do this markup work on, then we can take this and we can copy it and move it over into a PowerPoint slide, or you could put it in Paint. And then here it is. Now you can use the markup tools in PowerPoint or use the markup tools in Paint, mark it up and save it. And then you have a historical record of what the analysis that you did. So that's another important option or capability that we have. We are not able to mark up these charts in StockCharts.com as we are the sharp charts. So maybe that's a feature that will be available to us in the future. Still, this is a great charting tool. It's a great charting engine for point and figure. Okay, so we will stop here and I'll be right back. Intraday point and figure analysis is a very powerful capability. If you're a subscriber to Stock Charts, you have the ability to draw intraday point and figure. Here is an example right here, the Nasdaq 100. This is a 30-minute data chart, 3-box method. So we can do 1 box, 3 box, 5 box. We can do a number of different techniques in the intraday data. And in this case, we are doing user-defined scaling. So we go down, we choose user-defined, and then there's a box to the right. We can put in our own chart scaling. This is also a very powerful tool. Now, there are 2 counts. There's 2 segments that we're counting here. The blue segment is a smaller accumulation area that shows up over the course of a number of weeks, probably about 1 to 2 weeks here. And this count takes us up to 12,275, 12,425. And so this was from in this case, we were at around 11,600. So these are trading charts. These are classic charts for doing swing trading and analyzing the intraday data for that. Now there is a larger count that we can take here in this accumulation structure off of this early September climactic high and reaction. There is a reaccumulation with a downward tilt to it. So we can take from this point here, notice this is the last place that the Nasdaq 100 reacts to before it starts to jump, in this wall, catapult wall goes right here, 11,325, and then up and out. So this count from here over to the initial selling climax across is 49 columns, 3-box method. So we go 49 times 3 times our scaling selection, user defined, of 25, gives us a count of 3,675 Nasdaq 100 points. That's impressive for an intraday chart. So we count, again, we follow the same principles that we did on the prior charts. We count from the low and we count from the count line. But in this case, the range of our accumulation structure is from the high to the low. So we take the midpoint. So we take the high minus the low, divide by 2. gives us this dotted line. I always use the convention of a dotted line for the halfway point because we want to get a wider uh, count objective range that we can work with, and the halfway point is an excellent tool. It's an old Wyckoffian technique. This gives us a count 14,375 to 14,900, and this market has just gone up and up. We're currently at 13,741. We have not quite achieved the minimum objective, but it's remarkable and amazing that here we are in an uptrend where an accumulation, in this case a reaccumulation structure, was able to identify a move of this magnitude. So impressive, such a useful tool, and it did it by the time we had reached this point right here. We were in a place where we could see that there was a huge count generated for higher prices, and all of this showed up on the 30-minute data chart. So this intraday tool is very powerful, and in my mind, it is a useful reason and a good reason to be a member of StockCharts.com to have access to these intraday charts. We've only got 2 minutes left. A couple more tips and tricks before we go. If you enjoy these workshop webinars, go to the bottom of this video and click on the thumbs up and let me know if this is helpful to you. Give me feedback. I love to hear from you. I love your questions. Thank you for those. Here is a 60-minute chart of the Nasdaq Composite. Intraday data, 3-box reversal in this case. Using ATR scaling, we get a scale of 6478. Look at this great count. This is the same area we just counted on the NASDAQ 100. So we have one last pullback into a last point of support. We take the count line across. We draw this across, look at preliminary support, matches last point of support. This, and arguably this is the climax. That often happens too. We count across 21 columns times 3 times 6478 gives us a whopping 4,081 points of objective that we add to the low and to the count line. And this gives us a count upwards 14,640, 14,964. So we are currently at 13,965. There's further to go and the upward move. So hold on here, and we are going to look at another chart. Note here, I drew the same chart again, but in this case, look, the box size is 6139. So the ATR adjustment is slightly different. We can't see all of the base. So let's do something here. Let's go to a user-defined setting, and let's use, instead of 6478, I think was where we were, let's put in our own box size of 75. So this is a very good thing to do. And now look, we can see all of this accumulation area that we just counted. So that's very useful to us. And then also look at this. Duration, end date. Let's go to fill the chart and see what we get. Now we have the accumulation area back in March, which we can count, and it actually gets us up into this area right here. Misses the top of this climax bar by one box. And then here we get this count, and of course we just saw that we have further to go. Doing more on this next week. Answer your questions then. Thanks for being here, and we'll see you next time.